Hi, I'm Paul Edelman, Global Chief Investment Strategist here at Russell Investments, and this is Market Week in Review for the week ending January 23rd, 2026. This has certainly been a volatility heavy week in financial markets, but also one with a lot of focus, excitement, and Seahawks jerseys around the office going into the NFC Championship game this weekend. Go Seahawks. From a financial market perspective, a lot of that volatility I was talking about was driven by developments in geopolitics. So over the weekend, we had the US administration proposed new tariffs on a number of European countries around its ambitions towards Greenland. But following some conversations in Davos, those tariffs were ultimately suspended. The situation seems to have calmed down. And that's created a sort of almost 180 and U-turn in financial markets. So peak to trough, early in the week, the S&P 500 index was down almost 2%. We're now back close to all-time highs again into what continues to look like a pretty sound fundamental picture for both the global business cycle and corporate earnings. The second development this week that was a focus for us was developments around the US business cycle. And two things stood out there. First, we had an upgrade to estimated US real GDP growth in the third quarter, revised up to 4.4%, which is a pretty punchy number from a historical perspective. Maybe even more important than that, though, there's been a lot of focus on the labor market, this low hire, low fire labor market regime that we've been in now for several months. This week, both initial jobless claims and continuing jobless claims surprised positively, suggesting that maybe the labor market is starting to stabilize here, which would be really good news and consistent with our expectation of a pretty healthy economy over 2026 that could potentially even be accelerating over the next couple of quarters. Third and finally, Japan's really been in focus this week, if not for the last couple of months now. There's been a push towards considering more fiscal stimulus from the Japanese government. That's been pressuring Japanese government bond yields higher. At the long end of the curve now, those yields are about as high as they've been since the late 1990s, which has been a pretty notable and remarkable trend out of Japan. But sitting here on Thursday's close, we started to see some stability into the market again now, particularly after the finance minister came out and said that they've taken steps to stabilize the market and will continue to do so. That helped to put a floor under investor sentiment, not only in Japan, but across global fixed income markets as well. That has been encouraging to see. So those were the key developments this week. Thanks for tuning in.
Hi, I'm Sophie Antal-Gibert, Head of Portfolio and Business Consulting at Russell Investments. If you liked what you just saw and heard, consider subscribing to our YouTube channel or check us out on LinkedIn. Thanks for tuning in.